I started learning how to create curriculums, how to do training needs analysis, and then I came across learning management systems, how to store information in a retrievable format that people can do courses. And then I went ahead and did so many of those courses in the financial services industry. I cannot say that I have known it all. I'm still learning, and what I've learned, I like sharing, and this such a forum is a very good opportunity for me actually to be able to share. Then and a short sabbatical of the financial services industry, but I came back in 2020 when I joined SIB investment banking. Basically, to the people who are not aware of what investment banks do, they know only commercial banks. They only know about commercial banks, and they know this is where the only place that you can keep your money safe. And there's a guard there, and there are 2 keys to the vault. It cannot be opened anytime. So your money is safe, and that conditioning and everything else. So you can imagine the transition now to getting what does an investment bank do? And then I realized that it's a whole world of knowledge, opportunities for investments, and actually investment banks keep businesses in place. They keep businesses in business, if I may, because this is where you get to raise capital. This is why you get to they get to do valuations. They're able to understand your financial problems. They're able to connect you with people who can fund you, things like that. For example, even raising capital through IPO, initial public offers. That an investment bank is able to do that. So investment banking is more than just credit creation and deposit taking that commercial banks do. Okay, so I found this a very interesting area, and now when I learned now there's even global markets, it opened a whole sea of knowledge, possibilities, and I can say now I'm even better experienced and more knowledgeable in these matters, but I'm still learning.
Yeah.
I can confidently talk to a potential investor and we can have a conversation, and we can guide each other into making a good investment decision. So it's a moment of sharing. So I'm eager and open to share the little that I know that journey. But the key takeaway there is that don't be tied to only what you studied in college. The world of today demands that you keep learning, you keep pursuing your talent. The internet has brought a lot of possibilities. Then now there's AI. I'm sure to some it's mind-boggling when you hear AI, when you don't understand even what the internet is and what it can do for you. But I encourage people to take advantage of the technological advancements, access to information, and learn as much as they can to future-proof their careers. If I may. Thank you.
Yeah. Victor, I must say you're extremely modest, because when your profile was sent to me, and I was thinking you're going to say it, but I'll say it since I'm on the mic now. So Victor has been an accomplished sales and marketing executive with over 14 years experience in investment and in the insurance industry, as he has mentioned. And even more importantly for our conversation this evening, under his leadership, the AUM of Mansa, and he'll tell us what the AUM of Mansa X means, has grown from about 240 million shillings to over 35 billion shillings, and his team from 10 salespeople to over 100 strong salespeople. So clearly something amazing is happening at Mansa X, and I'm a client. So I don't think you even knew that, but I'm a client of Mansa X, and it has been
glad to learn that.
an incredible journey for me, my Shama as well, my little group of friends that we put money aside at the end of the month. Every week actually is also investing in Mansa X, and we have seen the benefits of it. So I am really looking forward to even for those who are here to learn a bit more about it. So Victor, we'll go to the first question. For those who are just beginning their investment journey, how can you describe money market funds and multi-asset funds, and what is the difference?
So for those beginning their investment journey, of course, there are so many things one needs to understand just beyond what is available for investment. Those at the initial stages of the investment journey need to understand their core objectives and their goals for investment. Where do they want to end at? That is very important. Once you lock in that, what is your retirement age? When do you want to retire? For how long do you want to work? What is your dream net worth? When you say, if I have this money in my account, I don't want to do anything else. I just want to put it in some fund somewhere, generate this rate of return, and this rate of return will be able to cater for my lifestyle. When you start a journey with a clear understanding of where you're headed, where you want to head to, it becomes much easier for you now to digest any piece of information that you come across. Terryanne, you've done a very fantastic job by bringing people together who are serious investors. I can say anybody in this forum is a serious investor because they actually invested for knowledge to come and listen to this. So that is why I don't just want to push solution, to push a product. I want them to have a deep understanding. First of all, you have to know your big why. Why do you work? When do you intend to stop working? What does financial freedom mean to you? And what does success mean to you? Don't read from a book. Don't ask a friend. Let this come from you. When you say, I'm successful, what does successful mean? I want to be financially independent, because I talk to many investors and potential people who want to invest there. Like, I want to earn a dream income. When you ask how much, they say just a lot of money that I can pay for everything I want. They still can't articulate exactly what does that exactly what you want means.
Yeah.
And living a happy life, what does a happy life mean? So the first thing you need to know is know thyself. Know yourself first. You will know, I love soft life, or I love driving big cars, or I love traveling the world, or I love helping people. When you lock in that, then when you enter any journey in the investments, you will know what your core objective is. So what are the typical investment needs? People want to fund education for their kids. People want to augment retirement income. People want to build a net worth, a certain net worth that they can even be able to do philanthropy and do other things in the community. People want to have some money generating returns that can cater for their health, instead of using that money sitting in a bank account and then you spend all in health and everything else. They are varied. People want to build a house that they have always seen in movies or something like that. But now you have to lock it in and say, I want to build my retirement home. This is why I want to retire. Of course, we know people these days live longer in retirement. Of course, those who have good packages as retirement, they live longer not working than they lived working, because of medical advancements. Because cases can be managed. People are earning better these days than before then, and people are able to live. There is access to information, and people are able to get cured, and they're able to live a longer life. So if someone is living longer than they are working, it means they have to really think, when I stop working, how much will be my net worth? And at a return of X year on year, will I sustain my lifestyle, or I'll become a burden to my kids? Imagine your young daughter, your son, and then there you are asking them for money and all that kind of stuff. Any parent doesn't want to bother their kids, but it happens. And you don't want to be a problem when you're visiting your son, your daughter, or something like that. Now you are a real problem. You want to be the one, the grandkids want to come and visit you. We are going to grandpas, we are going to grandmas, because you actually worked yourself and you created what's called generational wealth. It is possible to create generational wealth when you hit a certain net worth and invest it wisely, have it properly diversified. It is not exposed to one particular risk, and it's not exposed to many risks. You're able to manage that and have it properly managed. Then you can actually create what we call intergenerational wealth. So know thyself is very critical. Go create a vision board of all those things you want to achieve. When you have that locked in, when you start your investment journey, people will be wondering, what does Terryanne do these days? And because you are a lady on a mission,
Yes.
Okay.
Oh,
So
wow.
what is a money market fund?
Yeah.
A money market fund, you just mentioned a chama. You just mentioned a chama somewhere. Now
Yeah.
imagine, I just want to be very rudimentary, explain this in a very basic manner. A money market fund, you can imagine now you in a chama where you are a number of you know each other, probably you live in one community or you are in a particular industry. You have a common goal, you have a mutual point of interest that brings you together. Now, I want you to imagine you actually pulling that money and bringing it together and putting it there on the table.
Mm-hmm.
So there on the table is the committee that decides, sasa hii pesa, we are going to buy waru from Nyahururu and bring it to Nairobi or wherever we want to do and be able to give this kind of return and all that kind of stuff. But now when you talk about how is that similar to a money market fund, it's a collective scheme.
Mm-hmm.
It's a collective scheme. It's a collective investment scheme or a mutual fund. So whenever we hear these words, these phrases, people tend to get confused. What is a unit trust fund? What is a mutual fund? What is a collective investment scheme? They have one similarity.
Mm-hmm.
Investors pooling their money to bring it together.
Mm-hmm.
Now, where it differs now with the chama is that you will leave this money to a professional fund manager. Now, another moment of groceries. Grocery. So you have fund manager, portfolio manager, asset manager. Who are these people? In essence,
Mm-hmm.
when you talk about a portfolio manager, asset manager, investment manager, you're talking about essentially the same person. There are very tiny differences in execution, but in essence, you're saying someone who is knowledgeable enough to take money given to them and make more money using that money.
Mm-hmm.
That more money is what we call a return.
Yes.
Okay? Basic. I'm getting very basic.
Yeah.
So when you come to a definition, so a money market fund is a type of a mutual fund that invests in low risk, short-term debt instruments. I want you to underline the word debt. When you invest in a money market fund, the underlying is debt.
Mm-hmm.
Why is it a debt? Because the underlyings there are treasury bills. When you issue treasury bills, you're actually lending the government. That's a debt. Commercial paper is like, for example, a private company wants to raise money through the public. For example, EAPL can issue a commercial paper. SIB, for example, if SIB wants to expand its operations and get into deeper other areas, they can raise funds through a commercial paper.
Mm-hmm.
Okay, so and we have what you call fixed deposits. You can put that money in a fixed deposit in a bank. Now look at it this way. When you have your own money as an investor, we have seen some money market funds with as low as 1,000, others I think 50, you can invest.
Mm.
Now, which commercial bank do you go with 50 and tell them, I want 10% return on my 50 bob 12 months from now? Does it generate anything, really?
Mm.
Now, when you bring the collective investment aspect, the fund manager now collects those funds from so many investors, 1 million, 1.5, 500, and all that kind of stuff, and now has a bigger ticket, has a bigger amount of money to
Yeah.
approach commercial bank and tell them, look here, my guy, I have this amount of money, I have 1 billion. What will you give me on this? Now you're talking, they have a bargaining power.
Mm-hmm. Mm-hmm.
So umoja ni nguvu. When you talk about collective investment schemes, it's about umoja ni nguvu, the Harambee spirit, if I may. You come together, you join forces, and now you have a bigger bargaining power. So money market funds leverage that bargaining power. They've just collected money from so many people and then put it there, and then they're able to generate those kind of returns. So the goal of money market funds essentially is to provide you with a safe, highly liquid, and a stable investment option.
Mm-hmm.
Safe, highly liquid, and a stable investment option. So what that means is that there are some compromises you'll have to make for that.
Yes.
And the risk there is inflation. Okay, there is a risk of inflation, but we shall come to look at the benefits of that, I think. And you're going to understand, people are going to understand that more. Now, I hope we understand what a money market fund is. Essentially, it's a collective investment schemes that invest in short-term debt instruments that have a short-term period of less than 1 year. Okay, 1 year and below. So which means they cannot invest in a government bond. They cannot buy land, okay? And they cannot buy gold and say we are buying gold. They cannot do that. It has to be debt. Interest-bearing assets, which we call IBs, interest-bearing assets. And the typical returns there average of 9 to 12%. Mostly average 9 to 12%, if you may. So you know what inflation can be. 9 to 12%. You will see some money market funds there reporting 19, 18, and all that kind of stuff. But I would also want you to look at them in the sense that how long have they been here? So a very small asset under management, don't be lured into this as a higher return. Look at other fundamentals. Don't be just guided by just a return. Look at the whole picture. Who is the fund manager for this money market fund? What are the typical returns the last 5 years, the last 10 years? And then you're able to proceed. Yeah. So a multi-asset fund, you see what we've mentioned there, what we've mentioned in our money market fund.
Yes.
You could call it multi-asset in the sense that, okay, it's not multi-asset at all. Actually, it's a debt. It's a debt. But if you try to break down debt, if you could say you've diversified your debt, if you've put T-bill, you've put fixed deposit, you've put a commercial paper, it's diversification in its own way, but you're still within one asset class called debt. So a money market fund is a single asset class. If you call it that way, it's a single asset class. But now when it comes to a multi-asset fund does not only look at debt. A multi-asset fund will look at debt, for example. It will look at equities, what you call shares, or what you call stocks. Equities, shares, stocks mean the same thing.
Yes.
Okay? So don't tell someone tell you I invest in stocks and equities and shares. People talk like that out there in the streets, but for people initiated in this forum, I'm sure they understand what we mean by this. So we invest in debt, we invest in equities, we invest in commodities, we invest in FX, invest in real estate. All that is what we call a multi-asset. So a multi-asset fund is able to bring, you get access across multiple asset classes, markets and asset classes. And this one has a potential to give you a higher return on investment as opposed to a single asset, and also less risky because you have spread your risk across various asset classes. So if one asset class doesn't perform, you're not exposed 100%. So when interest rates are low, for example, a money market fund will not make sense. Investors will rush into buying stocks.
Yes.
Investors will look at other. So if you're already invested in money market, when interest rates go down, then you are left exposed. Okay? So we said safe and all that kind of stuff, but inflation-wise, you're not doing very well. Because people will be like, I can only give you 2%. The interest rates are very low. I can give you 2 or 3%. Okay, so then it becomes a bit of a risk. That's why I'm multi-asset fund, and I'm very happy to see you asking these questions. I'm tying them together: money market fund and a multi-asset fund. Multi-asset fund gives you better ways. It's like being in a room that has one door and another room that's many doors, and in case of fire, and that door has fire, the other doors that are that are open, and you can still exit. I'm just trying to explain to you that visualization and all that kind of stuff.
Yes.
Yeah, we'll get to that bit again. Yeah, thank you.
All right, thank you. Thank you for clarifying, the difference between an MMF, and of course, personally, and sometimes we think we know, but I've also learned so much about exactly what an MMF is, and I know that if somebody asks me tomorrow, I'll be able to not expertly say it the way you have, but at least I have a a much better idea now about what it is. And I see somebody has already asked my next question. That is Brenda. She says, and she's asking about Mansa X. So I would like to first ask, introduce us to Mansa X and how it works. And if you can tie it in with Brenda's question, who's asking, how safe is it to invest in Mansa X? And is it time consuming?
So Mansa X Fund is an investment solution offered by Standard Investment Bank. Standard Investment Bank has been in the country for the last, been here in Kenya for the last 29 years, turning 30 at the end of this year. So 30 years in the country. So as an investment bank, there is always need to look at market and study market trends and preferences and what investors are looking for. So we consume a lot of research, and that is how Mansa X Fund was born, was created, if I may, with a need to cure low returns and concentration risk, what we call geographical concentration, and also concentration risk when it comes to the available asset classes. A typical Kenyan investor will put their money in real estate. They will put their money in a money market fund, like we've mentioned. They will put their money they will invest in treasury bills directly. They will invest in commercial papers directly, for example. They will invest at Nairobi Stock Exchange, pick a counter that seems to be performing very well. And they'll pick, for example, Safaricom, they pick Equity, BAT, for example. And then I've mentioned real estate, for example, the exposure of that portfolio, typically the return on investment, we are talking about between 7 and 13% oscillating. And that time I'm talking about real return, what goes back to the investors' pockets, not those gross returns with management fee loaded and withholding taxes loaded. And that's why it's very important as an investor, if you're analyzing an investment solution, ask the person advising you, this return, is it net of tax? Is it net of management fee? It's very important. If I adjust for inflation, what am I left with? If you realize that the returns after inflation cannot at least enable you achieve your objective, then you're better off looking elsewhere, because you might look there at a 15% return fund, but when you look at the real return, it's not actually what gets into your pocket at the end of the day. So it's very important. So we looked at all these, the average return, then the company felt like, why can't we offer a solution that provides above market average return? And that is innovation. You are being innovative. You're trying to look at solutions that can can add more value. And who is at a better position to do that other than an investment banker who understands the entire scope of the capital markets and has exposure also to global markets and understands how global markets works. So there was need to look beyond the Kenyan investors' portfolio, because if you look at most of the funds locally, for example, they will invest heavily in bonds. They will invest heavily in equities, for example. Now, if you look at NSE, how has NSE performed the last 5-10 years? If you look at government bonds, except this particular period right now, when inflation was over the roof, I think a year ago, inflation was about 9.2%. Yeah, the days of Sufuria Kokichwa, we know what was happening that particular time, cost of living and everything else. But now what since CBK kept raising interest rates, and I think this has kind of being managed, because we saw inflation numbers coming to about 4.6%, which means it has been able to manage, and maybe we anticipate a rate cut for that particular matter. So what I'm trying to say here is that a fund like Mansa X, why it was created was to offer the Kenyan investor a way out of just focusing on below average returns, but now give you an exposure to global markets. And now this in a discretionary manner, meaning we manage the fund on your behalf. Our portfolio management team, we pull the funds like a collective investment scheme. We are a special collective investment scheme because of our nature of our license and our nature of diversification. So Mansa X is a multi-asset strategy fund that invests in multiple assets globally and across the various asset classes. For example, FX markets, equities markets, debt market, commodities, derivatives, cash and cash equivalents. And since inception of this fund, we've been able to generate a net return of 17.72%, 5-year annual rolling average of 17.72%. For the first 6 months of 2024, we've been able to generate about 10.6, and the 10.6 is net. It is not annualized. This is the actual return for those six months.
Mhm.
Okay, the first 6 months. So we are the last month of Q3. So at the end of this month, we'll be able to produce the reports, to report our performance for the fund for Q3 as well. And then hopefully we'll keep a positive trend to keep growing our investors' portfolios and giving them better returns. So that being able to set us apart from local or the traditional funds, as opposed to a multi-asset strategy fund that actually has a global markets exposure. And we've seen those results. And through your forum, we'll be able to share the fund fact sheet, and people will be able to see actually how this fund has performed. And at some moment, if you can allow me to share the screen and even show people how that has performed, it will answer so many questions.
Yes,
So,
absolutely. I will give you
okay.
the space to, to show the fact sheet and of course the performance of Mansa X. But before we get there, Victor, how does somebody start investing in Mansa X?
So you normally you can visit our website. Once you visit our website, sib.co.ke /Mansa X, you'll be able to access our web form. That web form, you fill in your details, your email address and phone number.
Mm-hmm.
My 100 strong, where one of them will be nudged to reach out to you within I think less than 5 minutes. Someone should call you. 3 to 5 minutes, you should get a call from SIB.
Oh, wow.
Or you can visit us at SIB, JQuat Tower, 16th floor.
Mm-hmm.
And you'll be ushered in and you'll be given someone you can be able to talk to. So the easiest way is to get into the website, the easiest way actually, so that you can have those preliminary discussions and book meetings and be able to book a meeting with a financial advisor. But you are free to walk in. We are located at Avenue, JQuat Tower, 16th floor. You'll be able to meet us and actually see where we hail from.
All right.
So when you log in, enter your details, you have a conversation with a financial advisor. They will look at your investment portfolio. It may not be the fine details, but just look at what is investable. What is your investable? And of this investable, do you have any liquidity needs for the next 6 months? Our minimum lock-in period is 6 months. But we recommend at least 12 months so that we remove that short-termism when it comes to investments, and then you'll be able to enjoy a better return. So if you need your money in the next 3 months, just pack it in a money market fund. Okay, we have already learned that. Put it in a money market fund. But for someone looking at a 12 months, sorry, not 12 years, 12 months period, with a lock-in period of about 6 months, then that money can actually be put in Mansa X. The onboarding procedure is very simple. Once you get your investment, your KYC, your ID, your phone number, your email address, and you sign our forms, within 2 hours, you have an investment account that you can actually go to your bank and fund the account. And then once we cite the funds, the value date is that particular day that we saw the funds. And then all you do is wait for the calendar quarters to receive your quarterly statements. And then you are free to call your financial advisor and ask questions about what's happening out there. Our new investors actually ask a lot of questions. I heard gold has gone up. Are you guys taking advantage of that? Or things like that. So, but it's okay. Or something has happened. This one has dropped in value. We get a lot of questions. But people who have invested with us over time, they have been through those motions and everything else. And they sit pretty, they work on what they do best. They focus on what they do best, and then let their money work for them. So it's as easy as that to actually invest in Mansa X. We make the procedure very short, and it's not time consuming. You don't have to wake up every day to check the app whether you're still in the money or out of the money. That one should not worry you, because you're professional fund managers or experts who are working on it. Yeah.
All right, Victor, I've actually made you host so that you're able to share the fact sheet and the performance of Mansa X. We've got a question from Edel Koki, who says, could you share an example of how to calculate the interest with an investment figure as an example? And then she also asks, are these annual returns? What happens if you invest in between the year?
Thank you so much, Idel Koki. It's a good question. I want you to know that, for example, this is a good example, an illustration of an investor who put, just a minute. There you go. Just wanted to make sure that this is visible. Is this clear to you, Terryanne? Is that visible?
Yes, it is.
Yeah, so this is an investor who puts 1 million January 15th, 2019. As at 30th June 2024, they are 1 million and earned them 1.569340 net return. That is in 66 months. Okay. So essentially, they did more than double their initial investment. Actually, they are now almost tripling the initial investment, because that's 1.5 million over. So their overall assets under management is now 2.569340. Okay. So for you to be able to understand how this would work, for example, from Q3 2022 to Q2 2024, you can see we have a quarterly average of 4.43%. So if you multiply that by 4 to get annualized, you are arriving to about 17.7 thereabout percent, 17.72% average annual return. So this is how you can be able to actually calculate how much you will get over that period of time. Okay. And the other bit, if you can actually visit what you call the calculator.net, and then you go to the investment calculator. Just put the starting amount, and then it will give you the ending amount, and you put the interest rate there. You'll be able to calculate those simulations. So these are the conversations that you normally have with our financial advisors. When you have a conversation, when you sit down with our financial advisors, these are the conversations that they're able to take you through. They're able to guide you. They're able to show you how you can be able to plan. Because if you don't know how much you anticipate to get, you may not be certain it will be exact this amount, because the returns are not actually guaranteed. Don't fall for someone tell you we're giving you guaranteed return. The reason as why we report performance and go as far back as this fund inception is to show you a track record. When you're evaluating an investment solutions, you have to look at the track record. The track record is very important. Someone can come to the interview and answer your questions. You are applying for a job, they answer every question. But if you ask their success, they have nothing to show. Then you should be worried a little bit. That's why, in as much as we say past performance is not an indicator of future performance, at least show me you've been there, done that. Then I believe we can walk that journey together. Okay. So when you tell you we navigated COVID, we navigated Russia-Ukraine incursion, there was Israeli Hamas, there was US general election. We have navigated that. These upcoming US general elections again. We've been able to navigate that. So if you explain that to someone, if someone approaches you with that this is our track record, then you're able to make a more informed decision. 4.43 quarterly average. Some guys will return that in a year and they will not be blinking when they're looking at you. 4.43 and they're okay, very okay with that. This is 4.43 net for 3 months. That can be possible with a global multi-asset strategy fund like Mansa X. Thank you.
All right. Victor, we've got a question from Alice Mwangi, and she asks, what is the minimum amount to invest in Mansa? And I want to connect that with a question that a lot of people ask around investments, especially last year when, the Kenyan shilling was very volatile. We saw a very strong dollar. How does Mansa X navigate that, and how am I assured that my investments are safe? I know you did talk about sort of cushioning from inflation earlier, but how about, currency fluctuations?
Yeah, so when you talk about inflation, when I mentioned a return on investment of 17.2, how are you protected from inflation when you invest in Mansa X, for example? When you get a return of 17, for example, last year we generated 18%. I'll get the exact number right now. We generated 18.01. That was 2023. So 18.01, what is the current rate of inflation? Even if you subtract 4%, you're still left with 14 net after inflation. But another fund that gives you a net of 7 or 6, when you adjust for inflation, you're left with 2 or something like that. So that's how we protect you from inflation. Now, currency depreciation. In the understanding that we trade in the global markets and predominantly the denomination is USD. USD is a stronger currency than the case fund. Historically, USD has been strong than case, and in a few months ago, it went to as high as 160. Some people had projected 200 and 250. But there are some interventions there that ensured that we still brought it back to, I think, below 130. 130 or it's actually below 130. So when we correct our Kenya shilling fund, the base currency is case, but we are able to enter into global markets. We're able to enter into global markets using the dollar. Okay, so we enter dollar-denominated markets. So the returns we generate are in dollar terms. So when you convert that into a Kenya shilling kind of return, that is why you see we have better returns. You don't just leverage currency. I want to make this very clear, because someone can say, those are just currency plays. Does it mean that when the Kenya shilling is strong, then now you're not going to give good returns? That is not true. We will still be able to generate better returns on investment, because we don't just depend on FX plays, what we call forex exchange plays. We talked about commodities, we talk about derivatives, we talk about global equities, we talk about global debt, okay? So that aspect of diversification ensures that we are still delivering above market average return, okay? So investments in global markets and USD denominated assets are able to shield our investors from the depreciation of the Kenyan shilling. So our performance is not tied to the performance of the Kenya shilling fund. So whether the Kenya shilling fund is strong or weak, a global multi-asset fund that employs what we call the long-short strategy trading model will always outperform a local fund that is purely invested in dollar fund only. So that aspect of diversification is what makes Mansa X. You cannot attribute the success of Mansa X to only one thing. It's multiple aspects brought together by our team of financial engineers who manage Mansa X fund, and they're able to curate those solutions. Yeah.
All right. Thank you so much, Victor. And I see you've answered the majority of the questions as we go along, at least the ones that I'd shared.
Sorry to cut you short, Terry. I have projected the question so that there's a slide there showing the fund profile, minimum investment, minimum top-up, lock-in period. So that is to inform everyone for all those questions they might ask. Withdraw 2 3 working days. That was our assets under management for TES and USD as of 30th June 2024. So I hope that answers so many questions.
Yes, and of course, just to let our participants know that I will share the link that Victor has mentioned. That's www.sib.co.ke / Mansa X. But I will also share it via email. I'll share a fact sheet or something
fact sheet,
that that the SIB and Mansa X team will share with me, so that you're able to have that. With your permission, to all our participants, I will, if you would like that, and please say yes in the comment section so I can share your contact details with the SIB and the Mansa X team, so that if you are interested in investing in Mansa X, they can reach out to you either via email or via your phone numbers, which you have shared with me during registration. Plus, so if you would like that, you have my email address, but also in the chat section, you can just say yes. Then I will take note of your name, and I will share your contact details with Victor and his team. All right, so Victor, we are almost coming to the end of our conversation, but I want to ask you, if there's something that I have left out, there's something you would like to cover, especially now. I know you have addressed, strategies for those who are starting out, that they must have the end in mind. What is your why? What do you want to achieve, at the end of the day? How do you want to live? What do you want to do at the end of your, let's say, your career? But for the, person who has invested before, what advice would you have for them to diversify or to, master that investment journey?
A good question, Terryanne. So for investors who have experience, they have been in the market, the first thing is consistency. You have to stay on course with your investment plan, even during downturns. Most of the guys, when they put their money and there is a downturn, they tend to sell off. They tend to sell off. What you need to understand, you have to be consistent. For example, I'll give a very good example. During the 2020 COVID pandemic, that a pandemic-induced market crash, if I may put it that way. Those who stayed invested recovered when markets rebound strongly in 2021. They stayed invested, but those who exited actually had nothing to go back to. So consistency is very important. So you have to keep investing whether the markets are up or down. There is some income that you get every month, every quarter, every 6 months, every year. You keep investing anyway, because you are focused on long-term success. So investments, one of the key factors of success in investments is time. Time in the market, not timing the market. So for experienced investors, if you do your time in the market, you'll be able to see a recovery over a long period of time. When people look at the way markets are moving on a daily basis, you can actually get, you can actually feel dizzy and fall down. You imagine how much you're losing. But when you look at a weekly basis or a monthly basis or a quarterly basis or a yearly basis, then you start realizing what I saw as being a volatile asset in a day is actually a very healthy investment over a long period of time. Yeah. A case in point, I would want everyone on this for go to investing.com and search MSFT. That is the ticker sign for Microsoft, MSFT, and look at its performance from 2016 up to now. Look at Amazon, look at Nvidia, okay, and look at their performance. And look at stocks like Zoom during COVID. What happened? Yeah. And Mansa X, for example, took advantage of those market movements when some certain asset classes were going down, others were going up. And as they are going, because of our long short trading methodology, we're able to go long positions for asset classes that are appreciating in value and go short on asset classes that are going down. So even during market turbulence, Mansa X remains resilient. So the other one is diversify globally. Make sure you have a global diversification. Don't limit yourself in the Kenyan markets. So as we've seen in the example of Mansa X, global exposure can help cushion you against the local economic shocks. And the political Afro-cinema we are treated to every 5 years. Yeah, so you not have that kind of exposure. Then, of course, keep learning. Investment strategies, they keep evolving. And then your approach should also keep evolving. You should attend webinars like this, read financial literature, instead of watching local TVs all the time. Set times to look at what is Bloomberg says, MSNBC, CNBC, okay, Yahoo Finance, Google Finance, yeah, so that you're able to get read a daily, like a business daily, papers like business daily. But I'm not promoting any paper, but I'm saying literature that keeps you informed about global events that impact markets. So a sophisticated, successful, experienced investor has a long-term mindset, is a long life learner, is not invested only in one asset class. They are properly diversified.
Mm-hmm. Wow, Victor, I don't know what to say. I have learned so much. I think this session has been amazing, and I've seen also in the chat, many of our participants have sent me either a direct message to say yes, that they would like more information on Mansa X, and some have also shared directly in the group. So, Victor, as we come to an end, we've got a number of people who joined us this evening to learn more about Mansa X, about investment. What is your final word for them? They have made time this evening to come and learn. And as you have said, as an investor, you have to keep learning, go out there and find information. And, you've mentioned a number of platforms where, we can find this information. As a parting shot, as a trainer, as an investment professional, as a global markets professional, what word do you have for us?
Here's my word. When you start your journey, you need to, for you to earn and live your dream life, you need to gain skills. You have to have a special set of skills that if some people need certain things done, they look for Terryanne. Only Terryanne Chebet can handle that. So those skills will give you income. That income will determine your real life. Where you stay, the car you drive, where your kids go to school, even if you're not married, your spouse, it determines all those, your level of income. Mm-hmm. Now, your dream life is determined by what you do with the money you make in your real life right now. What do you do with that income that comes to you at whatever frequency, daily, weekly, monthly? Are you able to set aside a certain amount, but you do it consistently? Mm-hmm. And here are 4 key numbers that I want to leave you with. Mm-hmm. The first number is fixed assets, fixed costs, sorry. Fixed costs. Whatever you get, 50 to 60% should be able to cover fixed costs. Your rent, all those other things that you must pay, including your loan, all your obligations that you must pay. Without paying this one, na watu watalala njaa, wengine watalala nje, ama wengine gari itachukuliwa, ama nyumba itafungwa. So those are fixed costs. That's a must. Mm-hmm. The other number is investments. Make sure you put at least 10%, of your income, monthly, quarterly, whatever frequency, you put it aside for investments. Mm-hmm. Number 3, savings. make sure for a rainy day, or you got a tire burst, or you hit what, and the car needs to be repaired, and all those kind of things. Or even the black tax, you receive calls from home. Our neighbor's goat has imekula nini. So you have to send something. Yeah, so that's so you set aside on savings. You make sure you have at least 6 months of your monthly expenditure set aside. That's an emergency fund. So if your monthly expenditure, for example, is 200,000 times 6, that is 1.2. You should have 1.2 somewhere as an emergency fund. Si pesa ya kwenda vacation. Si pesa ya kwenda nimeona nguo mpya, nimeona nini. No. That one remains there. And that is what you keep. So savings. So you can divide 5 savings for a rainy day, savings for, just savings, but make sure it's a minimum of 10. Then the last number, which is very important for you to enjoy your real life, 30 to 35% guilt-free spending. Guilt-free spending. You can spend guilt-free because look at this, you have paid all your bills, your obligations, your loans are paid, kila kitu, and then 20%, if you think about it, there's an investment and there's a savings component. It adds up to a minimum of 20%. That 20% has been put aside on that. You're not touching. Then you are left with 30 to 35%. You guilt-free spending. Buy yourself that expensive watch. Buy yourself that expensive phone. Buy yourself that nice dress. Do that nice hairdo, trendy, everything. Feel good in your current life. You cannot live poor to build a rich future. My guys, you cannot. You cannot live a poor life to build but you can live a modest, frugal life and choose what you love the most. If you love traveling, you have to cut on other things that you can't be traveling and then you're traveling and then you're doing other things that take away from you until you reach a certain level of net worth where now you get money left, right, and center. This one is a coupon, this is a dividend, this is what, this is a maturity, this is a what. That is the next level. But for now, when you're building for the future, don't forget to live a rich life today for a richer future. So that to 35% guilt-free spending. So these are insights from the guy called Ramit Sethi. Ramit Sethi is a guy, the author of the book, I Will Teach You to Be Rich. Oh. Ramit Sethi. Ramit, R-A-M-I-T, Sethi, I think is S-E-D-H-I or T-H-I, Sethi. He has a show on Netflix called I'll Teach You to Be Rich. Go watch that one instead of watching those other funny shows. And then there's a book written by a guy called Morgan Housel. The book is Psychology of Money. You stop blaming yourself for the financial mistakes you've ever made. You start appreciating yourself. They are actually not mistakes. That is you. So you need to embrace you and continue doing better and better. Once you understand that the financial choices I make as Victor Marangu and the financial choices you make as Terryanne Chebet, with same information, same country, same network, are totally different because of the irrational nature of human beings. Human beings are irrational. They act differently in the same environment, same information. That uniqueness is actually what gives rise or life the markets. That's why we have financial markets. People are buying, others are holding, others are selling. You understand? Yeah. Even in life itself. This person is in a relationship with this one, wanashikana na huyu mwingine, and huyu mtu ni mbaya, this other one is a good person. Why? Because we are not the same. And people look at things differently. We were never taught about money in school. No one taught you how to manage your first pay slip when you are hired. It's very sad. The system is rigged to create people who just work. You can go to school, stay there for 8 years, go to high school, stay there for 4 years, go to college, you stay for 4 years. So you're taught the discipline of staying in one place with a schedule so that they generate workers. But of course, when you get information you are exposed, then learn the critical skills and inculcate this into your kids. How to manage your money, how to raise a child. Those are the key skills that needs to be taught in schools. Thank you, Terry.
Oh, Victor, that is so brilliant. Thank you so much. You are such a teacher, I must say. And it has been so interesting and really engaging listening to you. I'm so grateful, Victor, that you made time to join us this evening. To all our participants, including those who are not able to join in and registered, I will be able to share a link to the recording of this conversation so you can listen to it at your own time. I see somebody's asking, that's Naomi, what's the name of the author? I'll Teach You to Be Rich. That's Ramit Sethi, but I will also share the names of the two books he has mentioned. One is The Psychology of Money, and the other one is I Will Teach You to Be Rich, which I'll share on the email that I'll send just after this or first thing tomorrow morning. So for now, I just want to say thank you, Victor. My God, this is amazing. And I hope in another couple of weeks, we can host something on Twitter Spaces as well. I think this has been an incredible conversation. You have taught us so much. I'm going away with your parting shot as well, which I will share on social media on the 4 numbers that you have shared with us, as well as all the amazing lessons that you've shared. So I'm so grateful. Victor, I'm grateful to the Mansa X and the SIB team as well. And just, to say I'm personally as an investor in Mansa X, my Chama also invests in Mansa X, and we have been, quite happy with the returns that we're getting. So as an individual, from a very personal perspective, I would highly recommend. So I'm looking forward to sharing that with you and hopefully hearing from you in another couple of months or another couple of years, what the experience has been like for you. So for now, Victor, I think you're still in the office, so let me say good night. So you can make a day. Thank you all so much for joining us this evening. Everyone who made it to be part of our conversation, thank you all. For those who missed out on the conversation, don't worry. I will be able to share it via the emails and the phone numbers that you provided. I'll be sharing a link later on, either this evening or tomorrow morning. For now, it's good night. God bless you, and let's keep investing for those who are, and let us start investing for those who are just beginning the investment journey. For now, it's good night.
Thank you, Terry. Good night.
Thank you.